Welcome back to Futures with Ben Lichtenstein. With the dollar coming off the recent 2018 highs, currency markets have been seeing a bit of a stir. For more on the recent price activity in the dollar and the other major currencies, let's bring in Alan Nuckman. He's the Chief Market Strategist at Agora Financial. Alan, welcome to Futures with Ben Lichtenstein. Good to have you back. First, let's talk a little bit about the dollar. Good
morning.
Good morning. Let's talk a little bit about the dollar and the recent jobs report. Some of the weakness that we're seeing is possibly related to disappointing wage growth data that we received on Friday?
Right. Yes and no. I've been talking about the dollar for many, many months in the fact that I didn't believe this bounce was for real. So we've stalled here at this 95 level. It seems to be a super level of resistance. For a trader, you can lean on that. And last week what you saw the euro currency have a healthy bounce, and the euro currency got up to 3-week highs here. So let's see if we can get some follow through finally on this dollar unwind a bit and see if it can retrace some of these recent gains. Again, I'm not fully convinced that the dollar has turned around and it's going to be up from here. I think this is just some short covering after the straight down move we had in 2017.
You know, Alan, I'm curious if you have any interest or focus this week directed towards the Canadian dollar, because we've got Bank of Canada, and I'm hearing that there's potential for a rate hike there. I'm curious, any expectations that they're going to move towards tightening?
Well, I try and make it very simple. I think if my premise is right and the dollar is going to drift lower, then other currencies should rise. So you started to see that here. The Canadian dollar is a commodity play. Obviously, with the oil comeback that we saw where it rallied 15% in 10 sessions, you know, that's firmed up a bit. So we'll have to wait and see. And we've also seen, if you look at gold last week made new 6-month lows and had a higher weekly close. So that could be a positive and a start of a bottom there. So we could see that filter through into some of the commodity currencies like the Canadian, like the Australian dollar. Again, from a trader standpoint, I think the reward is more on the upside in those currencies. Again, looking for that dollar to move lower.
You know, Alan, I've been watching that Canadian dollar. You mentioned, again, the commodity tied to or the close ties to the commodity, the crude oil. But for the most part, the crude's been on the move higher. Canadian dollar is just slowly starting to kick in. Why do you think we've seen that little bit of a disconnect between the rally in the crude and, well, now the slow to come rally in the Canadian dollar?
Well, I'm not a geopolitical expert, but they've been having some problems in Canada with their grade of crudes not getting the world price. They're heavily discounted, so it hasn't filtered through as much yet. Now, that doesn't mean it's not going to happen. So we'll have to wait and see. But I think over time that they'll benefit, obviously, from the higher oil prices, just not immediately. So to get back to some other commodities, not that it's that important in Canada, but you saw the same thing happen in corn and soybeans last week. New year lows and a higher weekly close. So that's a positive. So you're seeing a lot of assets reflate once again that have suffered a bit. So that could be helpful. You know, the macro market is moving higher. Obviously, the great week we had in stocks last week, that could be beneficial. And let's see if we can get some more follow through. 2,800 in the S&P. I know everybody stared at that. And we'll see if we're going to make another swing at taking that out. If we do, you know, then we're talking about taking out those highs once again. I had gone out on a limb a couple weeks back, about a month back, saying that I thought we'd see new highs by the 4th of July. It may be the end of July, so I may be a little bit off, but I'm still looking for the market to make new highs.
Well, definitely ran into some headwind there with some of the concerns related to trade tariff concerns, but let's talk a little bit about the British pound. I want to stick with the currencies here because there's been a lot of focus on the pound today. We had Brexit secretary resigning. Now, normally this would spark some concern and you would think a sell-off, but we actually caught a bid in the pound. Is the idea here being that this was he was a bit of a roadblock in terms of the path to progress in Brexit?
Yeah, that's getting deep. I'm not sure, to be honest with you, but again, it comes back to, for you and I, we could talk all day about price action. So the price action's positive, and that's the way you have to read it. The overall trend remains strong there, moving to the upside. So it doesn't look like it's derailing the currency action. And again, you know, this euro currency on the same, in the same vein, pushing up above the 118.5 level. That's showing some resiliency there. Again, the key for the euro is the 120. So let's see if it can take another swing at that, and that would be the confirmation that this dollar power may have stalled.
So, Alan, we talked a little bit about the dollar. We've talked, well, you just briefly touched on the euro currency. We talked our neighbor to the north, the Canadians. Let's talk the Mexican peso now,
yen.
because
Okay.
we'll talk yen in a second, but the peso rally, NAFTA latest is what I'm wondering if you've heard anything new or if you think this is just the new president's willingness to work with the U.S. and optimism associated with it.
Well, yeah, you get that little honeymoon period, and so we'll look to see if this can follow through as far as Mexico goes and the relationship with the United States. It can probably only get better right now, I would think, at this point. So we will have to wait to see how that goes with the peso. But it's still somewhat range bound. If you look at the action over the last year, it's really just not finding. Finding that hard bottom after the long decline that we had seen in that peso.
Alan, I'm curious. It sounds like you are expecting to see some more strength coming out of the euro currency. Again,
Right.
Is this because we've been seeing some, well, it seems like the economic data turned up a little bit over the last couple weeks. Do you feel like it's just a matter of time before they have to raise rates, or are you actually seeing something in the data that's pointing you in that direction?
Well, everything looked great until they came out and actually said one day that they're not going to raise rates until the end of the year. And that's, we had that one day that gave up all those gains, and maybe people are thinking it through that it's not catastrophic for the currency, that over time, that's obviously the path of least resistance is higher. So we'll be watching that, but as a trader, again, looking for the euro to continue to climb and build on this bottom that we've seen here in the recent action.
All right, real quick, Alan, you tried to get some thoughts in there for a second, but I cut you off. Your thoughts on the yen. For me, I've been watching. It seems just to be a pawn in this chess game in terms of risk on, risk off. And for the most part, if you take a look at it, basically since April, this market's been, looks like between 92.50 to about 90 even. What have you been seeing in the yen?
Yeah, same thing. You would think that it would be a flight to quality actor, and it hasn't been. So that's been somewhat disappointing in the price action. But again, lean on this 90 level and see if that's going to hold. So it all comes down to some simple numbers to see if these walls can hold, and if they don't, you've got less risk buying against the 90 in the yen and or selling against the 95 in the dollar index. And so I think that can put the favorable reward to risk, put the reward to risk into your favor using some of these solid levels. And if it goes, then our opinions will have to change.
Alan, last question for you this morning. We got some CPI, PPI numbers coming out this week. Do you feel like the attention's going to shift back to the eco data now that some of the trade tariff concerns have diminished, or at the very least have been absorbed by the market already?
Yes and no. I think it'll shift back to earnings, because earnings growth is what's going to get the markets focused on fundamentals once again. And you're going to talk about the earnings growth has been the increase. The estimates have increased from 19% to 23%. Now that seems like a really strong number, but let's remember we were at a 34% earnings growth back in 2010 when this whole thing started. So I'm going to say once again, the death of the bull market has been greatly exaggerated so far.
All right, well, we'll keep a close eye on earnings. We'll keep a close eye on dollar activity and some of the strength we've been seeing in the euro. Alan, I want to thank you for joining us this morning. Traders, that's
Thanks,
Alan
Ben.
Nuckman from Agora Financial. Now,